Okay, so one of the main reasons someone would elect S-Corp status is to save money on taxes. That's pretty obvious. But the way you're going to do that is essentially you are going to save taxes on self-employment taxes. So as a normal sole proprietorship, Schedule C, non-S-Corp, on all profits at your entity, you are going to pay a flat 15.3% self-employment tax. That is essentially the employer and employee side of Social Security and Medicare. So let's say you make $100,000, there's going to be $100,000 profit, slight deduction, basically it's 0.92% of that $100,000 is what's going to actually get taxed. So that's going to be roughly, let's call it $92,000 at 15.3%. So you're going to pay about $14,000 just in self-employment tax. That is not even counting federal income taxes yet. So the reason the S-Corps in recent years have gotten a lot of popularity and a lot of people want to elect S-Corp status is because you are able to not pay the self-employment tax on the distributions to the members of an S-Corp. So in my prior example, if you receive a $50,000 K-1 from an S-Corp, that $50,000 is not going to be taxed with self-employment taxes. Now you're still going to pay federal income tax on that, but you get to avoid that portion of the self-employment tax on the distributions or business income or profit of the S-Corp. Now, the catch to this is to be able to have an S-Corp and have a good profit, the owners of the S-Corp need to pay themselves a reasonable compensation, a reasonable salary. So this reasonable compensation is going to be taxed with self-employment taxes. So for example, let's say your gross sales are $300,000, you have another $50,000 of expenses, and now you're going to say your reasonable compensation, which is normally going to be based off the market, your education, your skill set, is going to be $100,000. So essentially that $100,000 is going to be taxed employee and employer side of essentially self-employment taxes. So now that's the only place you're going to pay self-employment taxes on the S-Corp. Now the profit that's left over, so you start with $300,000, you had $100,000 of salary now, because remember, as an S-Corp, you are the owner and employee. So you're going to deduct the $50,000 expenses and the $100,000 salary from the S-Corp. So $300,000 minus $150,000, that is $150,000 of profit. Now that $150,000, let's say it's a sole member S-Corp, that will be issued a K-1 to the sole member. You will not pay self-employment tax on that $150,000 distribution. You will pay federal income tax at the individual marginal rate now that it's a pass-through entity. So essentially, big thing to focus on, the reason individuals want to elect S-Corp status is to basically not pay or not get hit as hard with self-employment tax. Now, the big catch is you have to pay a reasonable salary to yourself. So there's going to be some additional costs to that. You're going to have to get a payroll provider or learn how to run payroll yourself, which I do not. I would really say go with ADP, go with a big company, something that is going to assist you running payroll. So you're going to have compliance costs. You're going to have to do a business tax return. You're going to have to do payroll provider, self-employment taxes for your salary. And then there's going to be other compliance costs like increased accounting fees, increased consulting fees, or other professional services. So all of that you need to factor in when electing the S-Corp status. Normally what I'm seeing is once your net profit is reaching above $85,000, it might make sense, depending on some of the prices I just listed out, to incorporate into an or to elect an S-Corp. If you're below that right now, let's say you're $50,000 profit, it probably makes more sense just to stay with the Schedule C for now. You know, a lot of accounting professionals are always going to push you to really elect S-Corp, make an S-Corp for two reasons. One, they're going to be able to charge you more. And then kind of related to number one, but now they have to do 2 tax returns for you. They have to do the S-Corp tax return, which is the business tax return, and then they also have to do your personal individual tax return that is based off of the K-1 from the S-Corp. So main thing to focus on is the S-Corp is going to help minimize self-employment taxes, and essentially to do an S-Corp, you need to pay yourself somewhat of a reasonable salary if you're profitable. Thank you.